I want to introduce Mr. Bill Colton. Bill is with ExxonMobil. He's the Vice President for Corporate Strategic Planning. He's had that position since 2009, and one of his opportunities he has in this job he has now is to be direct the production of their annual energy outlook. Bill tells me that they've been making this energy outlook public for about the last 10 years, but it's been going on internally for at least 50 years, and probably before that, because I think he said that was the last sort of recorded evidence that they have. And this is not something they're doing for public relations. This is something they do as the basis and core of their internal planning and their investment decision processes and their strategies. And as Director of Corporate Strategic Planning, Exxon, as you know, is a global company, arguably one of the biggest companies in the world of any type. So this is an important foundation for what they do. Bill is an engineer like me, a chemical engineer, I believe, from Michigan Technological University in Upper Michigan. He graduated in 1975 and went to work for Exxon right away out of college. He's had a number of positions upstream, downstream, and in finance, and now in corporate strategic planning. So I hope you'll enjoy his presentation today. He's going to give us, I think, your latest outlook that came out in the fall last year. This is a very timely report, and I think you'll enjoy his presentation. Please welcome Bill Colton.
Thank you, Bruce, and good afternoon. I'm just delighted to have this opportunity to speak with all of you today. What I'm going to try to do in this brief 30-minute presentation is to give you at least the short version of our outlook for energy, and it's basically sharing with you the work done by our team at ExxonMobil of scientists, engineers, and economists who give us a view to the future of energy looking out to our horizon year of 2040. And one of the points I wanted to make, as Bruce alluded to, is that the main purpose for doing this work is to guide our own business. We use this to develop all of our business strategies and to help underpin our billion-dollar investment decisions. So we have a very clear focus on trying to understand how we think the future of energy is really going to unfold. In fact, before I get started, I just want to make one key point, which is that we really have a focus on future consumers. And in a way, this is just business strategy 101, right? The only way to be successful in business is to make sure that you're making the products and the investments that are compatible with what future consumers need. So as we go through here, we'll talk a lot about what makes sense for future consumers. So with that, and by the way, we will have about 10 or 15 minutes at the end for questions. So we'll go through the outlook and then we'll open it up for questions. I do want to emphasize that this is a bottom-up exercise. We look at each of over 100 countries, country by country, and it's important you do that when you look at energy forecasts. We then break down each country into 15 different demand sectors. Within each demand sector, we assume that consumers have up to 20 different fuel types to choose from. We, of course, have to integrate it on a global basis, so we look at trade flows. And importantly, we have to forecast future technology, which is not really an easy thing to do, and probably the hardest thing to forecast of all, which is future government policies. As you know, in the world of energy, policies are one of the most important elements. And so we have to not only hear what policymakers say they're going to do, but we have to kind of handicap how do we think that's really going to play out. And we'll talk about some of that too. Now, I know this is a very sophisticated audience, so I don't have to say too much about energy units, but still I want to share some of this, just maybe it can help you with your neighbors and your friends as you talk about energy, because I'm really trying to emphasize the point about how energy demands start with people's demands and build up into huge numbers of immense scale on a global basis. Now, you know you can pick any energy unit you want. With some public audiences, I like to start with what might be the most basic energy reference of all, which is the first use of energy, which is to make fires. So you could say the most basic unit of energy is a log of wood, which happens to have 24,500 BTUs. Now, in more modern terms, that's equal to a gallon of gasoline equivalent. People see on their electric bills at home kilowatt hours. In kilowatt hours, it's 36 kilowatt hours. Or if you're a millennial, you might relate more to batteries. It's 13,000 batteries or 4,000 smartphone batteries. Now, you know you can pick any energy reference you want and convert them, and we're going to try to take some of these units and move into larger scale. But I always like to remind people you have to start with people. And what we're going to do is look at the energy demand for one person in one day. This is for a U.S. person, and we're going to use our log units as we go through. Starting with household use, every day every person needs 7 equivalent logs. This is for heating, electricity, etc. Also personal transportation. You know, when people think about energy, they usually think about only personal transportation, but obviously that's just a piece. We have industrial use, obviously energy used to make all the things that we use. We have commercial transportation, moving things around. And then lastly, commercial buildings, schools, hospitals, and office buildings. And so when you add all this up, for each person in one day, it amounts to 34 of our log units, and converting that to a more modern equivalent, it would be equivalent to 7 gallons of gasoline in one day. But now we have to take and we roll those up into global numbers. So we're going to start with this same per capita number, but remember I told you this was for a U.S. person. So if we go on a global basis, the first thing you see is that on an average basis, the energy consumption per capita is much, much lower. And of course, this is because of lower living standards, and we'll talk about that in a minute. But then it's a matter of just doing the simple math. You have to multiply it by the current population of 7 billion people. So when you do that, you come up with a total daily energy demand for the world of 12 billion gallons a day. And this is the scale point that we always like to emphasize, because a lot of people don't quite understand how important scale is in the energy business. And to those of us who work in the energy business, this is an undertaking of enormous magnitude every day, that we have to safely and reliably produce all of this energy, and to do it in a way that's affordable and convenient for consumers. Now, as we talk about the energy outlook numbers, we're going to be using millions of barrels a day of oil equivalent, which of course is a very common unit in the energy industry. We also use quads, which is quadrillion BTUs. And I'm sure this audience knows that quadrillion is a million billion, right? Okay. So now I want to start with kind of a top line view of the energy outlook, and then we're going to kind of drill down into the sectors. And in a way, this is kind of the simplest way to present the energy outlook, which is you start with a number of people. So we have on the left panel here population, which you see growing to about 9 billion people by the year 2040. And please note that we're going to use the same horizon year for all the charts, 2040, and their base year in the middle of around 2010. And of course, you have all these people, and they all need energy, and what drives the use of energy more than any other factor is economic activity, which is what we show in the middle panel of GDP growth, and we show the world economy more than doubling over this period. So then the question is, with the growth in population, the expansion of the economy by more than a factor of 2, how much energy do we need for the future? And we turned it off. There we go. And the answer is 35% more. Our outlook would say that we need 35% more energy in the future. Now, right away, you can see a fairly dramatic trend here. As you look at the pace of growth in economic activity, is much higher than the pace of growth in energy. And this is because of energy efficiencies. And this is really nothing new. If you look back in time, our society has always become more energy efficient. We become efficient in all sectors. In fact, just to make this point, this line here shows you how much more energy the world would need if we didn't assume future efficiencies in our outlook. And we'll talk about those efficiencies as we go through each sector. Now, a couple other points I want to make by slicing these data a little bit differently. Starting, if you look on the far left, we've broken them down into regions. OECD countries at the bottom in blue, these are the developed countries like the US and Europe. And you see China and India, and you see the dominance of these economies. And if we could kind of just go across to the far right here, I just want to make a few points. First of all, look at the energy demand in the developed countries. It's absolutely flat. So this is actually quite an amazing trend in the world of energy, that we expect that these OECD or developed economies are going to continue to expand at a very strong pace, but we will not need more energy. So that's kind of an incredible statistic, and it's again because of energy efficiencies. When you look at, so all of the growth in energy demand is because we need to support the economic expansion in these developing economies. And that's one of the key themes that comes out of our outlook. Even though they too will enjoy the benefits of efficiencies, the economic growth rates are so much faster, it really drives the demand for energy. Now, talking a little more about standards of living here, this just breaks down GDP per capita again into these regional groups, starting with the OECD. And the way this is structured is the top of the bar is the GDP per capita in the year 2040. The dotted line shows where we are in our base year of 2010. And so the growth is the improvement in GDP per capita. Although I always like to say GDP per capita always sounds like such a kind of statistical thing, it's really about people and living standards. One of the key drivers of energy demands is the fact that as people's standards of living improve, they're going to use more energy. And this is, I always say, the easiest part of the energy outlook to explain, is that people everywhere in the world want the same things that we have. They'd like to have a clean home. They'd like modern cooking fuels, a refrigerator, a TV. They want a cell phone, and someday they'd like to own a car. And this is a very good news, positive story, but all of these things require energy, and so it's a big driver in the outlook. Now, the energy outlook has both a supply side and a demand side, and we're going to start with the demand side, and we break down the demand side into these four segments of electricity generation, industrial, transportation, and residential commercial. And I just want to make one point on this chart. Please notice that electricity is not only the largest sector, but it has the highest growth. And again, this isn't really hard to appreciate. Electricity is a very convenient form of energy. It's kind of people's favorite form of energy because it's so convenient. People don't think so much about what fuels are used to make all that electricity, but we'll talk about that. So let's start with transportation. And here I show the total growth in transportation demand, which we show growing by about 30% over this period. And again, there's some kind of dramatic trends here. The first one is light duty at the bottom. Now, just to be clear, light duty is mostly cars, so just think cars. Is again a completely flat outlook. Now, let me tell you, there's two big things going on here, but they just happen to exactly offset each other. I'm going to show you in a minute that we expect the number of cars in the world to double over this period, so up by a factor of 2. But we expect the efficiency of those same cars to double over this period, so they tend to offset each other. Of course, it's a different outlook depending what country you look at, but again, it's a fairly dramatic trend. So all of the growth in this sector is in what we call the heavy duty and commercial sectors of heavy duty, mainly just think trucks, small trucks and large trucks, aviation, marine. And the way to think about this is just remember that these sectors are more closely correlated with economic expansion. You know, you make more stuff, you got to move more stuff around. It's really as simple as that. Now, when we talk about the light duty sector, everybody always wants to know, what are we assuming? What kind of cars people are going to be driving in the future? And this chart tries to answer that. And for the sake of time, I'll just drive your attention to the key point here, which is we see the emerging trend of the full hybrid car becoming dominant in the future. And just to be clear, when we talk about a full hybrid, we mean a car like the Toyota Prius. This is not some futuristic technology. I mean, we have them today. And a Prius has on board both a conventional internal combustion engine and a small battery and electric motor. And I always say, you know, engineers always appreciate the value of compromises. It's kind of got the best of both systems. But importantly, they get very high gas mileage. A Prius today can get 50 miles per gallon. And so we see this kind of car emerging as much more important in the future. And I might add, most of this is driven by government mandates and policies. Consumers on their own wouldn't necessarily seek out these kind of cars, but I think this audience is quite familiar with what's going on in that space in terms of government policies. Now, on heavy-duty transportation, on this left side just shows you how that's broken out. We show heavy-duty transportation growing even in the OECD countries, but again, most of the growth is in the developing economies. When you break that same data down into what types of fuels we show here, gasoline, again, is relatively flat. There's huge growth in diesel. For anyone who's in the refining business, this is a very important trend. And you do see that we show gas emerging as a more important fuel over time. This is natural gas. And we get asked a lot about whether we see natural gas as making sense for transportation of all types. And we think it probably fits best in commercial transportation. In particular, if you think of like a FedEx fleet that comes back to the same depot every night where it makes sense to refuel them in one place. And also we show LNG, or liquefied natural gas, for long-haul trucking is potentially making sense. But it tends to be a country-by-country analysis depending on the prices of gas and the nature of the transportation. The next sector we have here is industrial. And I'll break this down. We show industrial demand growing by 30% over this period. We have growth in chemicals. Actually, chemicals growth is much faster than GDP in all these countries. As living standards improve, people tend to buy more packaging, more products that have plastics in them. So chemicals has a very robust growth rate. We have heavy industry, steel, automobiles, textile, cement. I just saw a statistic the other day that China in the last 3 years made more cement than the U.S. used in the last century. People have no idea of the amount of growth in China. In fact, I have to say, we've kind of done a deep dive on what it would be like for more people in China to be living in big cities thinking they might be more efficient. But the fact is they need a lot more energy to build these big cities because of the steel and the cement. So it's kind of an interesting space to study. Energy industry itself, for the sake of time, I won't go over these in detail. And then we have agriculture, lubricants, and asphalt. But there's really growth across the board. Now, the last sector I'm going to talk about on the demand side is electricity generation. And please remember, I showed you earlier that this is not only the largest sector, but it's the sector that has the largest growth. We show the demand for electricity almost doubling over this period, as we show here. We show this is the demand on the electricity side. And just to kind of try to break that down, we show the base demand declining because of efficiencies. But then when you look at industrial growth around the world, population growth, and importantly, if you try to isolate the impact of standards of living, again, you can see how important it is that this shift in standards of living is driving energy demands. And on the right here, we just show the electricity demand for a few select regions and countries. Just want to make a few points here. You can see, for instance, that China is shown to not only have the largest electricity demand, but they're already larger than the United States. And you can see, of course, in these developing countries, the pace of growth is very different than the developed countries where it's much slower growth or even flat in some cases. Now, I'd made this point earlier that people love electricity. It's very easy to use. It's very convenient. You know, you plug in your cell phone. You don't worry about where the electricity comes from. But we know in the energy business it's hugely important to decide what fuels are we going to use to make all of this electricity. And so let's talk about that. I sometimes say I think this, for me, is the most important chart in the energy outlook because it's all about what fuels are we going to use to make this electricity. And the first thing I want to say about this chart is it's not my chart. If you look at the bottom, the note on the bottom, it's EPRI, which I'm sure many of you know here is the premier research organization that supports the electric power industry. And I'll also tell you I'm not really going to drag you through every cell in this matrix. I'm going to try to simplify it. But what it does, it kind of allows you to put yourself in the shoes of a power generation company and to think about how am I going to make these choices of what fuel to use. If you look across the top, you can see the choices are coal with CCS, now that's carbon capture and sequestration, natural gas, nuclear, wind, and solar. And down the bottom, the rows, are the different drivers that would influence the choice of fuel. Now, to make this simpler, I'm going to only look at 3 factors. I think this story is driven by these 3 factors, and that's the cost of electricity. Obviously, economics always matters. CO2 emissions, and we'll talk some more about CO2 emissions, but obviously everyone's keenly watching the relative rate of CO2 emissions, and then availability. One of the panelists today talked about the intermittency for renewables, and so of course the fact that some sources can make power on demand and others can't becomes quite important. So when you look at it this way, if you look at electricity cost, Obviously, coal and natural gas in the U.S. are very competitive. Historically, coal has actually been the cheapest way to make power. But then on the other end of that, you have the renewables, which tend to be higher cost. Most of the demand growth in renewables recently has been driven by government policies with subsidies and mandates because they are higher cost. You see coal with CCS. I'm not going to talk too much about CCS for the sake of time, but it is significantly more expensive. Now, in CO2 emissions, here you can see coal has the worst profile. It has the highest CO2 emissions relative to anything else. Natural gas is much better. We show kind of half a circle here because it has about half the emissions relative to coal. And I know this was talked about at the panel earlier this morning also. And then, of course, this is where the renewables really look good. They have very low or essentially no CO2 emissions. And then you have availability. And here it's really just the intermittency issue here with renewables not being able to make power on demand. Now, for power generation networks, this is actually quite critical because the size of your network has to be set by the demand on peak power days. Like I know in Texas, it's that afternoon in August when you have the highest temperature and everybody's got their ACs cranked up high. The question is, on that day, how much power can you produce? And so it becomes quite a penalty for the renewables, but it has to be worked into the matrix. Now, I kind of lay it out this, I keep pushing the wrong button, sorry about that. We kind of put a box around natural gas because we show in this sector no fuel becomes more popular than natural gas just because it tends to be a good compromise across all of these factors. You can build natural gas plants at a reasonable cost. They're very affordable. It doesn't require new technology. It has half the emissions relative to coal. And it can make power on demand. So it tends to be a very good mix of all these factors, which is why we see natural gas into power as becoming dominant in the future. Again, it depends on what country you're talking about, but this one chart alone kind of explains why we show so much demand growth for natural gas. Okay, now this chart just wraps up the demand side of the outlook, and what I show here is for each major fuel, the total demand in the year 2040, the dotted line is where we are in the base year of 2010, and the percent number at the top is the average annual growth rate. And just a few observations. Oil remains number one, mainly because of its unique abilities to provide fuel for transportation. Obviously, energy density is critical, and convenience is critical for transportation. You've got to carry your energy with you, and so oil does remain dominant. Gas has the largest growth rate. If you look at the difference between the dotted line and the top line, no fuel grows more in absolute terms than natural gas. And this is mainly because of its convenience for electric power generation. Coal, we show staying relatively flat. But notice it also doesn't go away. I mean, countries like China and India and even the US are going to continue to use coal. And then the last point I'm going to make, if you look second from the right, we show solar, wind, and biofuels. Please notice they have the highest growth rate compared to any other fuel. So all this, what you read about them growing faster than anything else is true. But the fact is they're starting from a very low base. It kind of gets back into this scalability and the importance of the divisor of the energy business. It's hard to make a big impact over a short period of time. So they do become significant, and it depends again, of course, what country you're talking about. Okay, now we've finished the demand side, and before I go to the supply side, I just have one chart to talk about CO2 emissions. It's hard to have an energy outlook conversation without also talking about CO2 emissions. And here we show that our outlook predicts that CO2 emissions will actually peak around the year 2035 and then begin to slowly decline. Now, here again, there's a huge trend here that I want to point out to you, which is if you look at the developed world, the OECD countries, the emissions are actually going down. So again, this is a good news story when you look at the developed countries because of efficiencies and a shift to lower carbon fuel mix. So all of the growth in CO2 emissions is in these developing countries. And again, that's driven by these people pursuing improved living standards. Now, some people will use this chart to say, well, now we found out who the culprits are in terms of emissions. So I always insist on showing the right-hand side of this chart, which is the emissions per person or emissions per capita, just because we have to remind ourselves that even in the year 2040, we show that people in countries like the US and Europe will use much more energy per capita even than these developed countries, even though their living standards will continue to improve. And so, you know, obviously their response to the criticism is, well, you know, you guys have all your stuff now. We're just trying to get our stuff, and so don't be critical of our growth in emissions. And more importantly, this helps to explain why this is such a challenging issue to work, because it's impossible to make significant progress with any one country. It's a global issue. It has to be worked globally. And so the only way to make significant progress is to engage at a global level on this issue, which, as you know, is a very difficult challenge. Okay, now we're going to move to the supply side of the outlook, and I'm going to start with liquid supply, which is mainly oil. Again, looking out to the year 2040, we show liquid supplies growing by 30% over this time. And I've put this chart together really to put a focus on the importance of technology. When you really step back from all of these outlooks, technology is always the biggest driver of progress. And here you can see this pretty clearly, that all the new sources, all the incremental growth is coming from these new technologies. Starting from the bottom, working up, we have conventional crude at the bottom. We have deep water technology, which you can see is growing significantly. And I have to tell you, even for me, working in the industry, it seems amazing what the industry can do now. You know, we can go out in the Gulf of Mexico in water that's 2 miles deep, go to the bottom of the ocean floor, and then punch a hole in the ocean floor, go 5 miles, take a right turn, go 3 more miles, and identify a pocket of oil. It's really pretty incredible what we can do. And a lot of this was unthinkable 20 years ago. So that's just one example of new technologies being deployed to grow oil supplies. We have oil sands like the Canadian oil sands. Tight oil, this is kind of the shale oil that we talk about, using horizontal drilling and hydraulic fracturing to produce oil in ways people didn't think was possible 20 years ago. Natural gas liquids, as the demand for natural gas continues to grow, we're going to get a lot more liquids from natural gas, which actually becomes quite a dominant source of supply in the future. And then we do show biofuels at the top, which we show growing, but frankly, almost all of that is driven by government policies, because we think that biofuels still are too expensive. We're doing a lot of research ourselves, trying to, I think all the oil companies are, trying to pursue advanced biofuels at reasonable cost, but it's really a tough, tough challenge. And I'll be happy to talk more about that if you'd like to hear more in the Q&A session. Now, I also like to emphasize, you notice on the bottom slice, people sometimes forget that to maintain conventional crude oil production, because of natural decline, you have to keep investing in that space in order to maintain those supplies. And so sometimes people talk about, you know, maybe we don't need to develop so much conventional oil in the future, but the fact is you do have to do that. You have to keep investing just to maintain supplies. We often get the question, how much oil is left in the world? And I always put some historical perspective on that. Because the fact is, even though we continue to use oil every year, obviously, we actually discover oil at a faster pace, and so the number keeps growing. Now, again, that is really a technology story, in particular with the shale oil and tight oil story now that people didn't even think about 10 years ago. If you do the math on this, it would suggest that the world has about 100 more years of oil supply. But I think the more interesting part of this story is because of technology, the number keeps growing. Now we move to energy trade. You know, again, it may seem like an obvious point, but where you find the energy and where you need the energy are obviously not always the same. And so the world of energy has always run on trade. Trade has always been a huge part of the energy industry. And of course, our energy outlook allows us to look at that. Now I'm going to build up just one region to kind of explain the format to you, and then I'll show you the world balances. We're going to start just by looking at North America, building up with conventional supplies, deep water. The dotted line is the demand. So when the bars go above the dotted line, it means we can become a net exporter. And of course, it's kind of old news now that everyone's forecasting that North America can be a net exporter of energy, which is quite a breakthrough that, again, people didn't see coming 10 years ago. Now, when you take and look at the rest of the world with the same kind of format, and for the sake of time, I'm just going to lay all these out here. And just a couple of observations. You see, we do show North America becoming a net exporter. The two biggest exporters, though, are Russia, Caspian, and the Middle East, as they have done conventionally. And the two big importers are Europe, which you can see there's a big gap between their demand and their supplies, which tend to be going down in Europe, and Asia Pacific. Again, because of the huge growth in Asia Pacific and places like China and India, they need a lot of oil. They don't have enough of their own supply, so they not only have a lot of import demand, but that level of imports will grow over time. Now, I always like to emphasize this isn't really a problem. As long as there's sufficient global supplies, this can be addressed quite easily. I always like to point out Japan as an example. Japan doesn't really have any supplies, but because they've had good trade policies and open markets and multiple sources of fuels, they've had a thriving economy relying on imports. This next chart shows that same kind of balance for natural gas. And actually, it's kind of striking how similar the outlook is for gas as it is with oil. We also show here North America becoming a net exporter, and the big importers, again, being Europe and Asia Pacific. Now here, in Asia Pacific, they actually do have significant growth in gas supplies, but they still can't quite meet demand in these countries, so we still show a gap there. Just a last couple of slides here to try to stay on my time schedule. I know I'm going very fast here. This just shows the total demand by region of energy. Remember, I told you we show energy demand growing 35%. And just to emphasize again the key theme here, that the OECD, or developed countries, is relatively flat. All of the demand growth is in the developing world as people pursue improved standards of living. And then if you look at how that demand is provided in terms of fuel breakdown, here you see the breakdown in energy supplies going forward. You see the emergence of nuclear over time, which we actually show growing by a factor of 2 over this time. You see the emergence of renewables coming to become a bigger factor in time. You know, one key point we always like to make is the world of energy evolves. It can't be transformed easily. You know, people talk about transforming the world of energy. When they talk that way, they often fail to talk about the cost of transforming anything. We're talking about trillions of dollars of investment over time. And so the fact is, it's difficult to make a big impact on the world of energy because of the scale of the energy industry. Now, that really concludes my remarks. I want to open it up for questions. If there's only 2 things I'd want you to walk away with that we think are the 2 big factors. One is the importance of developing economies and the improvement in living standards, which really is driving energy demands around the world. And the second factor is just the importance of technology. And really, that's true for any industry. You could have someone stand up here to talk about the future of any industry, and I promise you they'd say one of the top factors is the emergence of new technologies. And to me, that's the good news story, because obviously we stand on the shoulders of many people who have developed tremendous technologies. We have every reason to be optimistic that some of our toughest challenges will be solved over time with new technologies, and particularly with the help of universities like the University of Oklahoma, with people studying to develop these new technologies. And, you know, I know everyone says that you are the future, but it's true. So with that, I'll be happy to take questions. I think we have a couple of mics here. We have people with...
Good afternoon. Thank you for that excellent presentation, sir. I have one question regarding the developing countries in terms of the energy use, and it focuses on gas, the natural gas. If you look around here, we have underground natural gas storages all over the place. None has been built in Africa, and yet most of these African countries are producing natural gas at astronomical magnitude. My question is, what is ExxonMobil doing to develop the market? Because there's market there. You already said that. But what can you do in those countries to facilitate and develop market for natural gas, especially building underground natural gas storage?
Yes, it's a great question. If you talk about Africa, I would say no continent has greater growth potential than Africa. There's a lot of people in Africa. Living standards are very low, so the potential for growth is really quite enormous there. Actually, ExxonMobil is quite active in Africa, in many countries there, and we're pursuing business opportunities to the extent that we can. I would say that the governance challenges in Africa are probably the biggest challenge we have there. This is true. I mean, you have governance challenges in every country, I should say. I don't want to pick on Africa, including the United States, I should be quick to say. And that's part of doing business, right? You have to find the right balance of regulatory policies, government policies, and industrial development. But I would say those challenges are very significant in Africa. And so we will pursue those opportunities where we see those challenges. I'm not so familiar with underground storage opportunities in Africa, so frankly, I can't really well answer that question. But certainly the potential is there. You have a question here? Yeah.
I didn't see any price assumptions. How do you deal with, what do you think the price of these products are going to be at various stages in your charts, without asking the question about the price of crude next week? But I am curious about how you do what assumptions you make
Sure.
about pricing.
Well, you know, every time I give an energy outlook, there's always one smart guy in the audience who said, you talked all about energy and you never said one thing about price. And so it's a great question. I'll try to answer it, although I'll also have to be quick to say the one subject that my lawyers will not let me talk about is price, because we're always accused of price signaling and that kind of thing. So I can't talk specifically. But to answer your question, is we obviously look at prices internally when we develop the outlook. But the way to think about this is that we're assuming prices that stay within certain boundaries that will not, that we have to consider how they affect consumer choices. And so we try to use prices that we test boundaries of ranges of how consumers will make their energy choices. And so we have to make assumptions that also don't impact economic growth. Like if we thought oil prices were going very high, it would impact economic growth. So I would say they stay within reasonable boundaries over this time. I would point you to people like the EIA and IEA who actually publish forecasts, and I would say, you know, look to their work for what I say are reasonable boundaries. Over here.
Obviously, you know, Exxon has continued to grow and is obviously one of the strongest E&P companies, energy companies in the world. And you've done that because you've been strategic about your growth. You've used your financial capability, et cetera, and you always look for opportunities. And you stay in the business because obviously your mandate is replace reserves. So you either do that on your own, exploration and production, or you acquire it.
Right.
Now, given the state of the market in the U.S., it's depressed. We know there's a lot of companies with great assets that currently, you know, are having tough times. What's your view right now, Exxon's view, about re-entering in a big way or bigger way, you know, domestic reserve capture by acquisition at this time?
Well, I'll try to answer that in a very short sort of way by saying, like any company, we're always looking at the M&A space. We're driven by value. It's all about value. And so we can't really say too much more specifically about the M&A space. And I really try to always contain my discussion to the energy outlook as opposed to ExxonMobil's business. But, you know, our chairman recently got that same question, and, you know, he said it also. It's all about value. And so we're always looking just like any other company and looking for shareholder value capture. Back in the back, we have one.
One of the top 3 or 4 threats that you've baked into your data?
Yeah, great question. One of the top threats, and I'm going to kind of couch that in terms of potential large changes to the outlook as we see it. You know, what could really change the game? And by the way, you know, what we present externally is kind of our reference-based case, but obviously internally we talk about, well, what could be different. The number one thing that always comes to mind for me is geopolitical changes. And in particular, actually on average, it's pretty easy to forecast global GDP, but if you talk about any one country, it's very difficult. And so we kind of think about geopolitical disruptions. Although, you know, honestly, people tend to think of that in a negative way. It can also be a positive way. Remember the China story? I mean, that was a big upside to the energy demand because nobody saw China's development coming 20, 25 years ago. And there's huge potential for that around the world. We just talked about Africa. If Africa ever followed the China path, just think of the implications for the people of Africa. So that's one area. The second thing has to be technology. We have a whole separate process looking at future technology. I actually happen to chair a group inside the company looking at the whole range of the horizon of future technology developments. What things should ExxonMobil be spending its money to research on? Like we're doing a lot of research on biofuels, carbon capture. What else should we be looking at? We have people looking at battery technology, solar technology, because you never know when there's going to be a breakthrough. And those, you're probably familiar with the term black swan, right? Well, you can't ask somebody what's the next black swan, because if you saw it coming, it wouldn't be a black swan, right? So we're a little paranoid in that space, but it's good to be a little paranoid. You should always be kind of looking in the horizon. And you asked for 3, though, so I have to come up with the third one. Can I stop after 2?
What's your outlook of China?
Well, we should. Well, look, everyone's talking about China's growth slowing down, but it's only because they've been on such a fast pace. First of all, the demographics. China's working population is peaking right now. So we always start with demographics. And so that alone is going to take some of the growth force away from China. And they're maturing, so you would expect to see growth rates slow down. They're still very strong growth rates, though. So I would say it's a positive outlook, even though it's slower growth.
Could you speak to the accuracy of your previous outlooks?
And the second smart guy always asks that question. So the accuracy of our previous outlooks. Well, I'm going to answer this in 2 ways. Actually, our management is always asking us that same question. We just, in fact, presented to them a 15-year look back, and we were almost amazed ourselves how well we nailed the demand side. Now, kind of our dirty little secret here is, remember, the world of energy is huge. It's hard to make big changes. And so you can't be that far off. And that was really part of what the story told you, was, we're not talking about 10 and 20% growth over a long period of time. And so our demand outlook was very, very good. Interestingly, the second part of my question is the supply outlook was not very good. Obviously, we didn't, now remember, we're talking 15 years ago. So we didn't see shale gas coming, and we didn't see tight oil coming. Now, when you think about this is the area we should know best, right? So there are surprises. And we do try to keep that discipline of always looking back to make sure that we're kind of not deluding ourselves about the future. And we really try to get a 50-50 right down the middle outlook. We're not trying to get it high or low because we're using it for business planning. Bruce.
Nuclear showed up on your chart.
Yeah.
Pretty much all green in the
Right.
areas that you highlighted.
Right.
Nuclear showed up on your chart next to natural gas as green in the 3 areas you highlighted. And it kind of scored badly on cost and time,
Right.
flexibility, and stuff like that. What would you see? I mean, this is personal view, but I see nuclear as the ultimate green energy.
Right.
And I think about countries like France.
Right.
And I worked overseas. I was around, and the French have been 70+% nuclear for electric generation for 30 years. Why isn't? What are the inhibitors?
Yeah, I'm so glad you asked that question because it's just a terrific question. When you think about the greenhouse gas challenge, here you have nuclear that has essentially 0 CO2 emissions, and it's more expensive, but not that much more expensive, and certainly can make power on demand. So why do we not show? We do show nuclear demand doubling, but still, why do we not see more growth? And it's really social considerations. And of course, the Fukushima incident didn't help this. If you just look on paper, nuclear looks very attractive and competitive. But then you look in countries like Germany. You talked about France. You have Germany and France right next to each other. And the Germans, and who could be more capable than running power or nuclear plants than the Germans? And they're saying we're not only going to not use the nuclear power in the future, but we're going to shut down the ones we have. So this is really a country-by-country outlook. Now, we do show growth in nuclear in the U.S., and part of that is we feel, it may be hard to site a new nuclear plant, but you can expand ones you already have. And so most of our growth is expanding current sites. And so, I agree with you. I think nuclear could probably play a bigger role and be a more important part of the mix. And you can imagine the environmentalists are very split on this matter.
A corollary question, and maybe a comment. it was in the comment and the questions and answers this morning in one of the last panel. We talked about going to the moon. And,
Right.
You know, it took John Kennedy, and it was during the Cold War, so there was a lot of competition. But it took Kennedy standing up and saying, we're going to go to the moon in like 2 years. I mean, we were like, are you kidding me? You know, but we did it. If we had the same kind of vision and said, okay, nuclear is the ultimate green energy, we're going to commit every ounce of technology development to breakthrough technology, to drive down the cost, to make it safe. If we did that, you know, and that's policy, okay.
Right.
But breaking away from and having the courage to say this is the long term beyond the bridge we got right now with natural gas, particularly. That's the long term future. But we've got to start working on it now. We can't wait 40 years or 30 years to do it.
And we would support that. When people ask us, well, what does ExxonMobil think the government policymakers should do? Is one of them is support basic research. You remember I mentioned technology is the strongest, highest potential impact lever. And so when we're talking about basic research, we're not talking about getting into commercial research, but for basic fundamental research, we think that's a very important role for governments around the world. Nuclear is just one example. I agree there's a lot of potential. And there's a lot of work that's going on right there. You know, the other thing you have to remember is because the world of energy is so large and there's so many dollars at stake, is people have great incentives to develop these new technologies. Can you imagine? I mean, we talk about, you know, Steve Jobs and the power or the computer industry and Bill Gates. You know, if there was a similar guy out there working on battery technologies or solar or nuclear, just imagine the rewards for that. So our system is pretty good at incentivizing that, but you do have to at least develop the basic technology to move these things forward. And if anything, I would caution people on picking one horse now. We always say, you know, you got to ride a lot of horses. We don't know where the next breakthrough is going to come from. So let's fund everything and try to, I would say, for instance, when we talk about funding a $1 billion demonstration of carbon capture, which the government has done, I'd say just think if I took that $1 billion and broke it into 1,000 $1 million grants. You know, who knows what would come from that. And I'm not saying we can't do both, but I think the whole idea of fundamental research is really a powerful lever. I think we have time for maybe one more question. One in the back? No? Well, somebody was asking for another dessert, I guess. Do I realistically see the U.S. being an exporter of oil? Well, I guess I could just say I hope so. I think it makes sense to export. You know, it's kind of an amazing position the industry is in, to have to ask the government to export. What other industry has to, you know, ask for permission to export? And I know there's a whole history there, but to me it's basic economics. You know, one of the great things about free trade is it's the ultimate win-win in economics, you know, it's really an economic concept of great elegance, that no matter what you're importing or exporting, it makes sense for both sides, and it's a way for both countries, the importer and the exporter, to grow. But there's a lot of politics around trade. It's not, even though it's a win-win for the economy, it's not a win-win for everyone. And so there's always vocal opponents who feel threatened by trade. That's part of how the politics of trade. You know, you can't, you know, as Adam Smith explained, if you're going to import wine from France to England, you can't expect the British winemakers to be happy. And they're going to make a lot of noise. And so you have to listen to all that noise, but this is where you expect government policymakers to be able to see through that, to say, hey, this is the right thing. And so we'll just have to see how that plays out. And I hope others in this room can join us in trying to explain why free trade is good. Anyway, I'm going to keep my time commitment and contract with this organization by stopping. And I've learned that's the most important thing to do, is stop talking at the right time. And I really appreciate your time and attention. And you know where I live. And if you have any other questions, feel free to contact me. Thank you very much.
Bill, thanks for those great comments. That's an outstanding presentation. I feel very fortunate, I think you all do too, that there are companies like ExxonMobil who spend a lot of time researching these important issues and gathering this data, and then are willing to share it with all of us. I know for us it provides great food for thought, Bill, as we plan for the future, and we rely on the great work that you guys do. So thank you very much for that. Also, thank you to all the speakers today. This has been fun for me because rarely do we get to come together in a symposium like this and hear from an academic panel and an industry panel addressing very important issues today. We heard from, I think you guys would agree, very, very bright academic experts who spend a lot of time researching these very important issues relating to energy development and environmental stewardship. And then it's always fun, of course, to hear from industry experts who are in the trenches dealing with these issues every day. Andy mentioned earlier during his comments something that I agree with. You know, I make my living drilling for producing oil and gas, and I'm very proud of what we do. It is an honorable profession, and I'm proud of the method or the ways that we have helped improve the quality of life for people all over the planet for decades and decades. At the same time, Andy, I have kids. I have my first grandchild, and I expect many more to come. And they're going to be around long after I'm gone. And so, like all of you, I think I too share. I'm very sensitive to, of course, energy development, but also environmental stewardship. And so I appreciate the comments from everyone today. And lastly, thanks to all of you for attending this year. It's been a great symposium, and we will see all of you next year. Thank you.